All right, guys. So, called for a market crash to start in December. That was the final high. Was correct about that. Almost got faked back out into thinking the crash was just this when it got back up to here. Really, it looks like price may have gotten manipulated to allow some people to unload positions that people who caught on too late but had some power and influence. I mean, this is just total speculation, but I think price. Some people needed to sell back at a certain price, so market makers did some favors for some people, bringing the market back up here, allowed the people in the know to get out of their positions, and that's what's happening now as people are unloading positions. I mean, that's just speculation, but I'm sure the truth isn't too far off from some form of that. But so the market's crashing. Now what? Well, I think it's going to go lower. In previous videos, I said it could go even take out the low of from 2023. From the crash of the summer, it could even actually take out the 2022 low, potentially. Unlikely, but possible. It would have to half in valuation, though, to do that. So I don't think it's going to quite go that low. But if it's like a dot-com crash, it actually will. And it could go even, thousands of points lower than that. Who knows? This could be a big crash. This could be a massive rug pull. Because think about this, okay? How many Bogle heads are there now? And I know I've said this before, but it's like so many retail investors are just buying into this market. Every time they get a paycheck that comes through, or whenever they get paid their salary, they literally automatically it's set to allocate a portion of their income as soon as that comes through to their account. Like it instantly buys. It instantly market orders shares of whatever ETF that mimics this or this or this, or a mix of all these things, or a global index, and they're all correlated. So that money is there for the taking. And what I mean by that is if markets crash far enough, people will panic sell near the bottom, which is stupid, right? They should just hold and keep going. But if people really think the market's going to crash to zero, which, during market crashes, that's usually actually what the most uninformed investors can start to believe, is be like, oh, this time it's actually just going to fail. If they can bleed people enough to really think it's going to fail, and they cause people to sell for a decent sized loss of all their years and years and years of passive investing, that's a lot of money to be made on the hands of, people. I guess they call it smart money or whatever, but just people who take the short side of things, right? So there's something to be gained from a massive crash, which is to take just it's not erasing generational wealth from like the average American or average just middle class investor, but it's a transfer of that wealth into the hands of the wealthy. Now, can't say that's exactly what's going to happen, but just saying, if the market crashed really, really, really far, a lot of people are going to be selling for pretty big losses, and that money's going to go to the short sellers. And so if people, if the powers that be are aware or are manipulating or causing a crash with rate cuts, there's a lot to be gained by doing that. But again, that's an extreme scenario. I'm not saying it's out of the realm of possibility. However, unlikely. Most likely, unlikely. Because I think that really the interest groups that tend to want to make these assets go up have a lot more influence than people who stand to benefit from a market crash. Although market crash, I mean, I don't know, maybe it's the same thing. Maybe they flip their bias, and when everyone and their grandmother is finally long, then they crash the market and take out everyone's savings, right? Or their investments. I mean, it's not their savings because it's in the market, but you know what I mean. People treat the market kind of like a savings account, right? So yeah, there's a lot to be, that's just be wary about that, because like it's possible, right? However, it does seem like inflation ultimately drives the price of these assets up. But there again, there's massive crashes when like interest rates get cut and banks adjust their lending profiles to from like variable rate programs to fixed rate programs. They try to get people in at the high rates locked in while rates go lower so that they make the better end of the zero sum game of that thing. They trap their customers into fixed rates while rates go down. Customers are stuck, everyone's trying to refinance all at the same time. Suddenly refinancing gets really difficult. You know, a lot of people go under, have to default. Anyway, there's just little signs here and there, and if you pay attention to it in your daily life, it will become apparent that something is shaky right now. And one sign I had today, it's some of you might find this to be funny to even notice, but I just tend to notice these little things like this. And so it actually, when it came to paying my electric bill, there's been times where in the past, during years and years of high inflation at this place I've lived currently, I've been living here since 2021, and I paid my utility bill a month late at times, just because like I'd forget, and it wasn't a big deal. The electric company never made a huge deal out of it, because you could pay with your credit card, and there's, during periods of massive credit creation, it's not hard to get approved for a loan or for credit, so it's not hard for someone to pay their electric bill, right? Now in a period where there's a credit crunch and all of a sudden money is, despite massive inflation, money's being hoarded and loans are hard to find. It's really hard to refinance. Everyone's already debt maxed, so it's not like they have available. They've already maxed out a lot of their credit. Again, maybe this is a bit of a reach, but all of a sudden I'm 10 days late. I'm not even 2 weeks late to pay my electric bill, and my electric company's sending me an email, like basically harassing me, saying like, you're now past due. And at least to my recollection, I don't think I've ever gotten a past due electric bill notification, unless I was like over a month behind, unless the next payment was already coming up to be due, then I'd get past due on no, I didn't even. There were times where I paid the previous month's and that month's at the same time, and they didn't even tell me about it. Like it didn't even bother them. They just knew I just pay it all then. I wasn't getting notifications and stuff. But now all of a sudden I'm just 10 days late to it and I'm past due. Now, again, this is something small, but it's just interesting that all of a sudden, when I see a actual market crash that I think could be potentially big unfolding, all of a sudden, businesses are getting, big businesses like a big electric company, all of a sudden is more concerned with whether or not their customers can pay their electric bill, which means that they're expecting, customers to soon not have a lot of money to spend on their electric bill. So, I mean, look, maybe it's just a small thing, but these things catch my attention. Like at the beginning of the 2022 crash, when all of a sudden Wells Fargo was pushing variable rate mortgages. They're like, look, rates are so low, right? And then I was like, oh man, I mean, I was pretty new to trading and stuff back then, but I just knew already that it's a zero sum game, and they wouldn't be pushing these variable rate mortgages, advertising low rates. I mean, I looked in the fine print and they were variable rates, so it's like somebody clued in Wells Fargo before rates started going up that rates were going to go up, and then in the span of a year, all of a sudden rates go from 0% to like the federal funds rate at least goes up to 5.5%. And it's like, well, people who bought into those those mortgage advertisement programs from like Wells Fargo, and I'm sure other banks did it too. Now they're screwed. They got in at a low rate. Now they're paying 5% plus whatever the interest that Wells Fargo's putting on top of that, right? You know, then all of a sudden now, I'm getting just hammered with mortgage offers, fixed rate mortgage offers, right as rates are gonna, people are predicting rates to keep going down, right? So the same banks that wanted to screw me with the variable rates are now trying to screw me with fixed rates. But anyway, it's just, you just have to pay attention. Like, these businesses, they're for profit. So if they're trying to, like, if they're pushing you, like, oh, if they're getting edgy about paying now, whereas before they were pretty lax about your payments, something's shifting, right? Something's shifting in the overall economy. And it could just be something small, or maybe they just got more serious about that stuff. But it's like, I don't know. To me, what it means is that big businesses and people in the know who can't control the market, but are, quick at adapting to conditions, they're starting to get worried. That's all that means to me, is like, I'm just seeing a little sign here, and I'm going to keep my eye out for more little signs. But I think people are actually starting to worry about this crash. And it could be big. It really could be. Or not. But I definitely think prices are going lower than they currently are. I'll say that. And this is not financial advice. Do your own due diligence, as if it's easy to figure that out. But yeah, I think prices are going to go lower, man. And one sign to me is like, when in a bull market, in a bull market, when you have these gap ups on the open, usually they don't get revisited. And if they do get revisited, usually maybe they just get filled in a bit, and then price jumps or turns around and keeps going. The fact that price just pretty much very quickly plummets through a gap up day that was green and bullish and closed up, and price just like obliterates that like it's nothing, to me that's bearish. That just means that, like, in this area where often you'd find a rejection and it goes back to the upside as buyers step in, if buyers are not exceeding sellers and prices just driving right through that, like, to me that's not a good sign, right, for a bull. And it's a great sign for a bear. And so, yeah, I mean, I warned you guys, like, sometime around here. I was like, yeah, maybe the crash really is coming, and then price moved a lot lower. So, and here I am saying, I will concede this. A lot of uninformed retail, though, like Wall Street Bets and stuff, now they are kind of anticipating a crash. So you would think maybe this crash is going to end then, if they're all thinking it's going to crash. But in my eyes, just because they're clued into a crash doesn't mean it's not going to keep crashing. The overall macroeconomic impact of rate cuts supersedes Wall Street Bets liquidity, right? So just because they might be right about it doesn't mean, just because they think it's going to crash doesn't mean it won't, right? Broken clocks right twice a day, right? So occasionally, Wall Street Bets is going to be correct about something, But yeah, I'd say stay tuned to the market and see what's going to unfold. But I'm pretty risk off. Excuse me again, sorry. I don't know how to short, and what I mean by that is, if you're serious about trading, like, there's certain elements to why you're able to take on a long position, for whether it be a day trade, a swing trade, position trade, anything like that, right? And the same for a short. So, like, because this market tends to be bullish, I have had a very difficult time trying to create a short-based strategy that's consistently profitable with the NASDAQ, just because it's very rarely crashing. So there's not much data on how to trade a crash. And so the same system that goes long, you can't just like flip it around and go short with it. It's not guaranteed to make to make money. to just if I took the same criteria for my long strategy and just had it enter a short position instead, I have no guarantee that that would work. So I don't, what I'm saying is like literally I don't know what the best situations to actually, where to actually short are. It's a lot more complicated than you might think. I don't know how wide my stop loss should be. I don't know where my take profit should be. All the stuff that I would do for a long position is not necessarily going to have the same, it's not going to just be the same for a short position. It's really not, it's not guaranteed. I mean, there's probably some similarities, but I don't have enough data to like prove that. So, this is like a bit of the Wild West here in terms of shorting, because bear markets they are usually shorter, but they are fast and violent. And so to me, the best way to short probably is just short right from the open and buy it back at the close. Again, not financial advice, but that's literally my best guess for shorting, which does work for long. I mean, that is the flip of a certain long strategy, but that's not the most profitable long strategy. That's not the way I trade long. But I'm just saying my best guess for how to make some profit during a market crash would be to just short right at the open and hold it all the way to the close and then sell at the close or buy it back at the close. Like literally that's my best guess. So I don't know. But anyway, this video is probably long enough. So take care, guys. I just want to check in with you all and confirm that it seems like my anticipation of a crash was correct, and I see the crash as like this could be just the beginning. And judging by the way the Federal Reserve is stretching out their rate cut timeline, this could be prolonged. I'm going to be honest, because I don't see the market recovering until they stop cutting rates. And if they're trying to cut rates throughout this year and next year, I mean, then you potentially do have a multi-year long bear market. So this could be intense, and this could this could transfer a lot of wealth. And it's not an erase of wealth, because the wealth doesn't just disappear. It just goes from one hand to another. But this is what I'm talking about with like the passive investing, like everyone, contributing paychecks to their 401k automatically, stuff like that. Just everyone on buy programs. Every time money comes in their bank account, like they automatically allocate a portion of their income to buying an index fund. And they think it's guaranteed profit. And it is usually, but things that some of you might not know about, like previous market crashes, like the financial crisis in the late 2000s or the dot-com crash in the early 2000s, is that generational wealth gets lost. Like people, like entire families, like families who are like upper middle class, all of a sudden, because of a market crash in their investments, like they become a working class family. And then for generations to come, that family, that new wealth, all of a sudden is now a working class family until a grandchild or even later becomes wealthy again, right? Like that happens. And that happened during the financial crisis. That happened during the dot-com crash. I'm sure it even happened during the COVID crash. Is like people go from being a wealthy family to a poor family. Like it happens. And people go from being a poor family to a wealthy family. Happens also, not as often, but so don't think that these people are immune, and that's actually it. Like upper middle class investing families become a great target for like ultra wealthy people who know more about the markets and stuff like this. Those people become a great target for wealth siphons, because think how many of those kinds of people are passively investing, right? Think how much they stand to lose and someone else stands to gain if the market crashes against them, and somebody can take on short positions at the right time. Like, just saying. Anyway, and I think this could be the crash that Michael Burry was like 2 years too early to. but because in 2023 he said to sell, and then he was like he was wrong, and then he shorted in 23. He caught the small bear market of the summer of 23, which there was like almost like a repeat of one last year, like the same months it kind of did like a repeat, but I think this is actually the big crash that could be coming. So, but not financial advice. Hopefully not, because I can't really start making money again till the bear market ends. So am I going to be stuck on the sidelines for 2 years, not taking day trades? Like I don't know. Am I going to have to learn how to short? I don't know. We'll see. But yeah. Anyway, take care, guys, and I'll see you soon.